So I started doing a lot of land flips in 2021 by using the open data and trying to cross a lot of the tax lien property, the foreclosure properties, out of state owners, different points of data, and making sure I was doing high volume marketing to find those off market, undervalued, underused land properties that could potentially be flipped for a profit. And then over time, I developed an expertise in entitlements, which is a fancy word for getting the permits, right? For a property, whether you upzone, you downzone, there's lots of different things you can do in the land game. Yeah, in terms of land entitlement deals, I'm doing my 18th portfolio right now. And we also that's the Landquire brand, and then we have the right.
Welcome to the Yacht Captain Investor Podcast. I'm your host, Scott Kidd, where every week we dive deep into conversations with real estate pros, business owners, and maritime professionals about their mindset and journey to success. Please help support us on our journey and our channel by liking, subscribing, and commenting below so we can help you in your journey to success. How are you doing today? Scott Kidd with the Yacht Captain Investor Podcast. Today I have a friend of mine, Romain, here today. And how are you doing today?
I'm great. How are you doing, Scott?
Oh, pretty good. Glad to have you here. For the few people that don't know who you are, tell us a little bit about yourself and your background.
Yeah, I mean, a lot of people know me as the land French guy. That's the French guy that invests in land in the US.
Yeah. Nice.
No, I got started in land investing full-time 5 years ago. My background is in international business and computer science. So I started doing a lot of land flips in 2021 by using the open data and trying to cross a lot of the tax lien property, the foreclosure properties, out of state owners, different points of data, and making sure I was doing high volume marketing to find those off market, undervalued, underused land properties that could potentially be flipped for a profit. And then over time, I developed an expertise in entitlements, which is a fancy word for getting the permits, right? For a property, whether you upzone, you downzone, there's lots of different things you can do in the land game. Yeah, in terms of land entitlement deals, I'm doing my 18th portfolio right now. And we also that's the Landquire brand, and then we have the RiseQuire brand, which is the land construction, where we're building mobile home parks and RV parks to cash flow from the land, not just flipping it, but cash flowing from it long term. So yeah, there's really two financial tools that we're trying to bring to the market to become eventually the number one land investment platform in the US down the line.
Very nice. And what are you seeing? Are you seeing people land banking more now, or were you seeing that prior? Because I know when interest rates were pretty low 10 years prior, people were just entitling them and flipping them to developers pretty quickly. But now it's not as much the case.
Yeah, it's a great question. I mean, right now, my focus has been for 2025, 2026, a lot of our focus in terms of marketing to find those properties at a good price are in Texas and Florida. So I have 3,000 plus lots being entitled in Texas, a couple hundreds being entitled in Florida. Everything on the single family side, I tend to resell because I don't want to compete with those larger developers. So I'm really trying to cater to DR, to Lennar, to Ashton Woods, to these guys that, have been, or public companies they've been in the game for a long time. And my business is really to find those land deals, entitle it for them. So bring easements, bring sewer, bring water, pre-application meetings, do pre-conceptuals, traffic studies, environmental studies. So do everything that they used to do pre '06. They used to have a lot of land on their balance sheets. Now they have much less land on the balance sheet and rather have group like us that are in the niche land investing game to do the uplift for them. So that's on the SFR. On the mobile home and RV side, we're really trying to keep those properties long term because the yield on cost is pretty high. If you build those properties, you can really nail it down and get 9, 10% yield on cost.
Well,
Because
that's pretty good.
yeah, I mean, if you compare to a multifamily property, you just have to build the mobile home parks. You just have to build the roads, the utilities, and the amenities, and then you open the park and lease the pads.
Yeah.
You don't have to own the homes. You can just lease the pads and have what's called TOH parks, tenant on home parks. So you own the land and you lease the land, and the people bring their home on top. And you
Mhm.
partner with broker dealers to place the homes on top of it. So right now we're planning on building 1,300 lots this year. It's a roughly a $70 million, construction project across 4 different parks, and it's gonna generate roughly 11 million in rent, in gross rent on a yearly basis. So that's really interesting projects as well. Instead of selling it to large developers, I would like to keep it for me and my investors and my portfolio of LPs that are investing with us.
Yeah, that's interesting that you say that it's about a 9-10% yield on cost because I know we're developing as well, and our target is usually about 7 for multifamily and some of the higher amenitized stuff that we do for multifamily, and then the single
Yeah,
family that are higher. Single family is a little bit higher because you have less that goes into it. But
yeah,
no, that's really great, especially so you mostly take the land and figure out what the developers want and basically just flip them the single family lots. You have quite a few of them, and that makes it easier for them because then they don't have to have a whole land department sourcing the land. So they basically outsource it to you,
correct,
and they pay you a little bit of a premium. But granted, if you're probably flipping them a certain amount of lots, you probably give them a little bit of a break on
correct.
depending on how many you're putting to them. Are you seeing the single family developers, are they moving a lot faster now? Are you seeing more homes coming, looking like things are opening up for
Yeah,
building?
I mean it's really on the property level. I think you have to really understand your property to see how quick they'll be able to move based on the amount of lots that you're trying to cater to them. Obviously, the bigger the project, the less buyers you'll get, obviously. So, for example, right now we're selling to a large national developer a 205 acres that we are finishing entitling for 1,017 lots. So if you get above 1,000 lots, you might get maybe 2 or 3 buyers that would be interested on a one-off basis. Everyone else will have to chop it up or buy it on a 3 to 5 year basis.
Like in a tranche, probably buy it in
Yeah,
tranche.
yeah. So I try to stay in the 2 to 500 lot post entitlement type of properties. So you're not competing with all the retail land investors, but you're also not, in the big national builder.
National chains, yeah.
Yeah, the mid-sized builders is really what I want to cater and want to find property for.
Are they mostly like housing schemes, or are they a lot of them infill lots, or are they a mixed?
Well, so I've raised capital and invested in 18 different portfolio. The first 7 we sold. Right now, we're focusing on entitlement for portfolio 7, 8, up to portfolio 18. It's really it's all infill residential, but a mix of RV, MH, and SFR. For some of them, we do the front of the road. We'll keep some commercial if the market is good with it. And after getting obviously BPOs and brokers to help us to figure whether the acreage for commercial would be higher than just keeping the full thing as residential. But yeah, it's a mix of everything, and right now I focus on the path of development of cities like San Antonio, for example, or Dallas. Those are two cities where we've got 50+% of our portfolio right now. Houston is really competitive. Austin is really competitive.
Yeah.
South of Florida is really competitive as well.
Yeah.
So
Yeah.
you got to stay really in the secondary markets. We're also doing a deal right now in Brownsville, Texas, which is
Mm.
right on the border.
Yeah,
And
on the border, yeah.
yeah, it's a $4 billion port, and there is a SpaceX that arrived. So that's a secondary market, only 100,000 people, but we're buying the land at 35% discount on the price per
Mm.
acre. So those are markets where sometimes they are overlooked by institutional investors. We're also doing a deal in Abilene, Texas, which is 5 minutes away from Stargate. For people that don't know, Stargate is the largest construction project in U.S. history.
Yeah.
They're
100
investing,
billion.
uh,
100 billion.
yeah. On the low end, it's going to be 100 billion. On the high end, it could be 500 billion.
Yeah.
So it's massive investments in data centers. I don't think AI is going away, so we got to be
No.
participating here in the growth.
Well, yeah, I see you have developed a very particular niche where you're going into like secondary markets and you're in between the retail and the institutional buyers for the lots. And I think it's a great strategy because you can find that in a lot of different segments of real estate and stuff like that. I know we're kind of doing that in our Dallas properties with development. We're going in with infill lots, and we're not building the 3, 4, 500 multifamily units. We're doing like 100 to
Okay.
150,
Yeah.
so that we can, because the secondary markets probably won't be able to take the 500 unit, and then you'll be competing against yourself during the lease up once it's
Yeah.
finished and stuff like that. And so it's kind of a similar strategy. I find that interesting because it's you're in that exact market where there's a lot of room for you to grow because you go too big and then you're competing against the big guys that have all the time in the world and all the balance sheet in the world where they can just wait you out. And then
Yeah.
there's a lot more competition on the retail side with the smaller lots and smaller positions because you have a lot more people vying for those. You
Yeah.
know, what do you see? I know you have a few projects that you're working on. I know in Texas and Florida. You just break those down a little bit for people that would like to know more about that.
Yeah, it's very simple. I mean, portfolio. So everything that we currently have bought under current management, I think there's $60 million in value. Portfolio 9 is a 750 multifamily land site with grocery stores and retail in Birmingham, Alabama. So we have another 3 to 4 months in entitlement, and we're gonna exit that as a package. Portfolio 10 is 170 pads RV in Okeechobee, Florida, on the lake. So the goal here is to put tiny homes and really focus on nice tiny homes, but with long-term tenants, so they can have access to that tiny home and rent it on Airbnb, and we just collect the rent for as long-term tenants as TOH Park. We keep the land and then we allow people to basically rent their tiny home on top.
Okay.
Portfolio 11, 12 are 360 MH and RV pads, and portfolio 12 is 780 MH. That's in the south of San Antonio. So it's really affordable housing. We're finishing the entitlement, and we're going to look at exiting that to a mobile home park developer, basically. So if there's anyone in your network that loves building mobile home parks and RV parks, we've got 1,000 lots in the south of San Antonio. Portfolio 14 is a site for 246 SFR lots in New Braunfels. New Braunfels is in between Austin and San Antonio. Right on the path of development, the road leading between New Braunfels and Seguin. So that triangle between Seguin, New Braunfels, and San Antonio is growing like crazy.
Yeah, it's going in.
Yeah, I think New Braunfels was the fastest growing city in the United States in 2024 in terms of demographic growth. So that's also why we really wanted to make sure we invest in that piece of land that we found off market. So that's portfolio 14. 15, we have a site in Seguin. We're doing a mobile home park. I think it's 400 plus MH site. Portfolio 16, it's a site in next to Orlando, but I think due diligence is going to fall apart here because the feasibility study is not looking good, so we're not going to acquire it. Portfolio 17, we just closed on it. It's in Texas as well. And 18 is in Brownsville, so south of Texas on the border, to do 300 lots, MH, full water, sewer, electricity already in place. 95% of the mobile home parks are already leased up. So I think it's going to be great to bring a new mobile home park in that market. And then the last one that I'm going to present to my LPs tomorrow, Thursday, sorry, is one in Greenville. So it's 45 minutes west of Dallas. This one is going to be 352 MH pads and RV. There's already 2 new parks that were built over the last 24 months, and they're filling up at anywhere between 12 to 15 homes a month in terms of absorption. So the absorption is obviously slower compared to a multifamily, but your yield on cost is much higher because you're just obviously building horizontal versus vertical.
Yeah.
So that's, I think, the for a lot of people that are in multifamily, that's kind of the difference here. You need a longer construction loan or HUD loan, depending on how you go for financing. I think minimum 3 years for those parks that are in between 2 to 300 lots. But yields are great. I mean, your equity multiple and IRR can go as high as 30-40% if you can execute right. So that's really what we're trying to do for our investors. Most of our investors are actually Europeans that want to diversify in the US dollar. That's, I would say, 85% of my database.
Oh, really? You said 85% of your database is?
Yeah. European, yeah. Francophone, so mostly people that speak French. So it's France, it's Canada, it's Belgium, it's Luxembourg, it's all the expats that are in Dubai. I mean, a lot of people really looking to diversify in the US. The American dream.
Yeah. Well, especially if, in Europe, the growth can be kind of slow sometimes. You have a little more protection too, hedging into the reserve currency as well. And that's something that will always be there as long provided the US dollar is always is the reserve currency. But plus it's, the capital markets here are very, very open to where you can do projects like this that give you a better return. And I know I had another friend who was doing homes in Ohio, and people were from France as well, and they were happy with 6 to 8% return.
It's hard. Yeah, it's hard in France to find returns. So
yeah, especially, and then you have taxes and other implications and stuff like that. And especially if you're, he had a lot of traction with people that were retired or semi-retired, and and they wanted to get a little bit better return on their savings and stuff.
Yeah.
It just goes.
And right now, I mean, for Europeans, it's looking good in terms of the currency change because the euro, the dollar is obviously down. I think we're at 116.
120, 116, something like this.
161. Yeah. So it only happened 20% of the time over the last 10 years, I believe. So it's pretty interesting for someone that has euro. Switzerland is obviously a market that has, it's a small market. So people that want to invest in real estate, it's hard to find real estate because the market is so small. So it's all eaten up by institutional investors. Every land play, every multifamily. I mean, it's by the time they present it to you, it's already subscribed.
Gone. It's already gone. Yeah, that's the thing, and I would imagine just the legalities and everything of investing in Europe in general it can be quite a bit tougher. I had friends that tried to start businesses in Europe, and it's not like in the States where you can start and fail several businesses all in the same day and get up and do it again tomorrow.
Yeah, I mean, here you can definitely you have more lenient. Yeah, I would say you can fail and start again. That's one thing. The bureaucracy in Europe
Yeah,
is a nightmare.
yeah,
So by the time you have an idea and you actually start working on it, I mean, it could be a year and a half to get the
yeah,
licensing, to open the bank accounts. I mean, here in the US, when I got here in 2016, I was like, oh my God, this country is really my adoption country. I mean, I'm never gonna leave because capital markets are great. The market
yeah,
is huge. There's like 3,500 counties in the US. So
yeah.
you can, and there is potentials everywhere. I mean, if you really want
Everyone.
to look for land deals, there's,
Yeah.
yeah.
Yeah,
Um,
there's so much different opportunity. They're just this is what you're doing is just another example of so many ways that you can do it. What you have to do, what works for you, and you found your niche in the
yeah,
land, and even niche down even further to go into a segment where not a lot of
affordable.
people are in there or affordable, and then because that's you're building a lot of different units that people can rent later on or buy into.
Yeah,
There's a big gap in the market. We're seeing a lot of built to rent is happening as well, just in townhomes and stuff. But what you're doing, that's the next phase too, because you're looking at RVs and looking at mobile home parks where the price point for that to be rented or bought is much less than
yeah.
the rest of these. And
And and it's only well right now it's MH and RV represent I believe 6% of the population in the US. So
yeah,
17 million people already lives in it. But I think I see it as a growing industry because obviously the salaries are not going up as
yeah,
much. Inflation is going up. So people that have a buy like a housing, power of 30,000, 25,000 a year. I mean, the only thing you can afford now is either a manufactured home or live in your RV.
yeah,
So that's a big portion of the population that if they want to own a home, they will need to go manufactured versus
yeah,
single family residence. So that's why I'm trying to keep those sparks. I don't want to own the homes because these are homes that probably last 40 to 50 years. Then you need to replace them versus yeah, just owning the land and cash flow from the land. So creating cash flow with just the land is really my ultimate goal over the next 10 years.
yeah. That's great. And this is definitely presents a very great cash flow option because you have and you see the trends of like as we get closer, housing becomes more and more unaffordable, and
Yeah,
even rents are starting to creep up pretty high. And as you stated, wages are not really going up. So
yeah,
this fills a great gap in the market, and you're also seeing a lot of the baby boomers are cashing out and retiring, and they don't necessarily want to buy another home where they have to cut the grass and do all that stuff, and they can move into a nice area. New Braunfels is a nice area where there's a lot of rivers. It's a very outdoor space,
yeah,
where people can actually do those things that it doesn't cost them very much to live there. And if you're on a fixed income, retirement or a baby boomer, you cash out in a place like Florida or New York, you can get in there and you can live for a relatively comfortable lifestyle for quite some time. And I think it's 10,000 baby boomers a day that are retiring or coming out of the market. So I think this represents a great solution, for a lot of different segments of the population.
yeah, yeah, definitely. I think there is space for everyone. There's no competitors. I think we're all here to fill the gap on what people
Yeah,
need, and the housing crisis is there. Whether it's multifamily,
yeah,
whether it's affordable, whether it's luxury,
yeah,
we need more housing.
yeah.
So
Yeah, we're still 4 million short, and they say in 10 years we'll be 4 to 6 million short, and also we're seeing that gap too because doing the development game and stuff. A lot of people with the rates going up quickly and prices and everything, cost of materials and everything. A lot of people went pencils down, but we continuing to keep moving ahead because if you don't, same like yourself, these projects are 2, 3, 4 year projects and stuff like that. So you have to keep moving, regardless of where you are in the cycle. You
yeah, I
know.
mean, you got to protect yourself as well on your capital stack. Everything that is pre-entitlement, I try to do 100% equity. So we buy the land outright. We include obviously the entitlement cost and insurance and taxes for a 5 year hold. But at least, knowing that land is very liquid, even though it's going to take me a year to entitle for Texas. Florida is more like 15 to 18 months. But once I'm done with my entitlements, at least I don't have a lender calling me and telling me, okay, where are you at?
Where's the money? Yeah.
Yeah, I have time to resell the land and vet the buyer properly, and I'm not negotiating against myself. I really make sure I can take care of my LP capital. So that's on the pre-entitlement. Then once you start, building those parks, then the capital stack is different. You want to go fast. You want to lease the pads as quick as possible to get stabilized. But then your risk is not one buyer. It's you obviously have a market where you need to fill 2, 3, 400 pads, and as long as you do good marketing, you should be able to fill the pads in 2, 3, 4 years, depending on how big your size of the property is. But yeah, affordable housing is definitely needed. That's why I'm going to keep those. Everything that is a single family and multifamily, I'm just going to let the big boys take my land deals on this.
Yeah, well, that's I see your strategy makes a lot of sense because you buy the land cash and
Yeah,
title it. That's the riskiest part. But if you own it free and clear, you're okay. That takes a lot of that de-risks the whole situation, especially once it's entitled, you have a lot more options for your investors and for everyone else that's coming in after, because then you have a solid plan and you know that it's going to work. You've done all the studies and everything else and know what the exact plan is, because I know getting people to invest in the actual procurement of the land and the entitlements, that is the riskiest part. So
yeah,
that takes a lot of the risk and the hard part out, because a
yeah,
lot of times what we do is we're looking for also land partners and stuff that have already done the entitlements. We come in and do the development and help them with the capital stack and do all
yeah,
the rest of those things, because it just makes sense. We fill a gap for them that
yeah,
potentially they don't necessarily want to do. So, like you said, there's so many ways to do it. There's so many,
yeah.
and there's enough for everybody. There's from land all the way up to things that are already finished and everything else. So you don't do any value add or anything else with anything else. It's just straight land development, correct? Right?
Yeah, land entitlement, land development. On the land side, I try to de-risk my entitlement. I try to be right outside of a city jurisdiction in property called unzoned, which means you
Mm.
can pretty much do the density that you want. So it's not a matter of knowing whether you're going to get the entitlement. It's more of a figuring out how many lots you're going to get. What's the density based on the current zoning laws? Do you have enough water? Do you have enough sewer? Do you have enough electricity? If you figure that out during your due diligence, then by the time you acquire the property, then you're de-risked as much as possible compared to the outcome you're going to get a year after that once you get your final plat from the county. So
Mm.
that's really how I make sure I have 100% success rate on my entitlement in Texas and Florida. And then on the land development, obviously, we want to make sure to have a GC in place, everyone insured, making sure there is a proper gap and proper process in place. But yeah, it's construction versus entitlement is always a conversation that I have with my investors. Some of them prefer the land flipping game. Some of them prefer the land development.
Yeah.
It's funny.
Yeah, it's true, because it's just what your risk profile is.
Yeah,
What could look like if someone is flipping a house or whatever. For me, it seems risky to me, but
yeah,
that's just because I don't have the experience doing it, and I won't do it. But some people say, well, development, that's really risky and stuff like that. I'm like, well, not really. It's relative. For us, like
yeah.
our
It's blind spots.
development.
It's
Yeah,
experience. It's blind spot.
yeah.
It's knowing what you're good at versus trying to be everything. Sometimes when you want to do everything, then you don't do nothing.
Yeah, For me, it's not because our development team, they've been doing it 35, 40 years. They have a huge construction background. So if they say this is what it's going to cost and this is what it is, hey, I take their
Trust.
word for it. I look at the numbers, but I have no leg to stand on and tell them it's not going to work because they've done it. That same
Yeah.
formula hundreds and
Overall.
hundreds of times, and so it's one of those things where your risk is all relative to who you're speaking to.
Correct. And what you
Yeah,
know
yeah,
versus
and
what you don't know.
and who you're talking to, because if you don't know what you don't know. So that's a big part of it. And there's a lot of things I wish I would have known when I was younger, but it was good that I didn't, because I probably would have taken
Yeah.
some different. I probably would have gotten myself into more trouble if I
Yeah.
just knew a little bit. But no. So what's in the future? More of these type of deals. Are you guys going to open a fund or to fund all these things, or are you looking to just continue on the same path, kind of each deal by deal?
Yeah, I would say, I mean, I have a long-term vision to create cash flow from the land that we developed. But when I look at my P&L and I look at the metrics that I established with my management team, um, not a lot of companies do it on a yearly basis. You do it on a quarterly basis and you hit the metrics and then you go to the next quarter.
Yeah,
So it's always kind of a 90-day sprint that we like to do to make sure everyone stays focused. I would say that quarter one 2026, we need to. The first goal was to close portfolio 17. So we finished raising 4.8 million on that land deal. The entitlement started, so that's great. Portfolio 18 in Brownsville, we have 2.7 million to raise to acquire the land, do the entitlements. The goal is to exit it at 5.5 in the next 2 to 3 years once we're done with entitlement. So that's portfolio 18, land flipping game. That's our bread and butter. And then portfolio 19, I'm presenting it Thursday. That's the 60 acre in Greenville to do 352 lots. So those three land deal, we want to make sure we can raise and close on it by the end of Q1. So that's for the Landquire land flipping business, and then for the RiseQuire, which is the land development to create cash flow from those mobile home parks. We have obviously RiseQuire 1, which is the deal in Abilene, where we have 9.5 million all in to invest, and the goal is to stabilize. It's going to generate 1.2 million in rent, and the goal is to partner with obviously Stargate there that are bringing. We don't know exactly, but they're probably bringing anywhere between 5 to 20,000 people, depending on how long they're going to stay and at any given time. And then the second bigger deal is the $60 million raise that we talked together briefly
yeah,
last week, where this is 3 parks that we finished entitlements on and on which we want to start construction by Q2. So that's going to generate the 60 million investment. It's going to generate 9.8 million in rent. So I think we can refi that. I think it's going to be at year 5 we're going to refi it or sell it, depending on what the LPs are interested in doing. But yeah,
yeah.
those are the 2 construction projects that we need to focus on parallel to the land flipping business.
Yeah, interesting, because you have the cash flow that develops enough cash flow to keep that sustainable, and then also pay for the land flipping to kind of keep everything moving together. So that's
Yeah.
no,
Yeah.
it's a great strategy, and I really think that you really have a lot of the bases covered there with all the things you're doing, and it's good to hear that someone's talking about land flipping and entitlements, and for you it's second nature, and it's easy for everything. There's no risk in it, for you, because you're used to doing it. And a lot of times the audiences kind of do it as and think of it as very risky. And a lot of times right
Yeah.
now real estate has a especially multifamily and mobile home parks, and a lot of segments of real estate, people are saying, well, it's getting, it's risky and this and that and everything else. But now is the time. Now is always the time to buy cash flowing assets, whether it be real estate or other types of assets, stocks, bonds, funds, what have you. I mean, it's always the time.
Yeah, nothing can be perfect in life. I think I like to be a person that move forward, even though I know that I don't have all the ingredients. You can never exactly know what's going to happen tomorrow in terms of the climate, in terms of the geopolitical, situation,
Yeah,
in terms of interest rate, in terms of population growth. I mean, you try to do as much research as you can, and then you wake up every day and you're like, okay, let's go get it. Let's go get it.
yeah, yeah,
Let's move everyone and making sure you can have your process in place. I mean, nowadays we've got AI that can do a lot for
yeah, yeah,
to answer
yeah.
email and talk to lenders and talk to LPs and sign contracts and go on ground. I mean, there's a lot that we can automate that we couldn't do a couple of years ago. I mean, when I first started, I remember, I mean, in
Probably
market.
sending out letters.
I'm still sending 5 to 10,000 mailers a month. Actually, this is a strategy that you can
It
automate
works.
on the pricing. You can automate on the data side, but sending mailers, I mean, has to be done by someone. But
Yeah,
they have
yeah,
robots. They have robots now.
yeah, yeah, yeah. I guess so. You could probably do that, but yeah, I know people still send letters. People still, that's one thing that I keep saying. Even with all the AI and everything, like the human interaction and the human connection, that will not go away.
No,
Especially with the investors, you're not going to be able to automate
no,
all the
no.
investors. You're going. They're still going to want to know what Romain is. Hey, what does he think about this one? Let me
Yeah,
talk to him because
of
they
course.
go meet with him. They're not going to just
So I
get.
think I think you can, in terms of investor relation, you can probably automate as much as possible the top of your funnel of your sales cycle
Yeah.
by implementing. I mean, what we do on our investor relation department is we like to implement a lot of tools, AI tools for the. So our marketing department is obviously content, paid ads, cold outreach, and warm outreach. So all those four have some kind of AI implemented
Mhm.
to automate and really reduce the manpower. And then on the sales side, to have conversations, we do have AI tools that make outreach to book appointments. But by the time you book an appointment, obviously you need human interaction to go over the details and making sure you know who you're talking to if you're going to place capital.
Yeah, and that's the thing. You can automate some of it, but the overall communication, the meeting, and everything else has to be with you or one person in your team. And I've found that you can automate the communication with the investor
Yeah,
relations, the reports, and the reporting, and
yeah,
but you do still have to check in with the investors and say, hey, well, this is what's going on. This is here. This is that.
yeah,
So
yeah, yeah, yeah. No,
well,
interesting.
I really like what you're doing, and I really
Thank
appreciate
you.
you coming on. For people that want to find out more about what you're doing and what you're working on, how do they find you?
So we've got our website called landquire.com, LAND choir, like acquire.com. We're on LinkedIn, we're on Facebook, we're Instagram, we're on YouTube. All our latest deals are published on our YouTube channel, so everyone can go and take a look at our track record and see if land investing would make sense for them in terms of diversification. Everything is SPV based, so we do one SPV, one company per land acquisition.
Ah, okay.
So it's not really a fund. It's more you choosing in which land deal you would like to get involved in. We've got obviously our compliance department that do all the KYC and AML and all accreditation for you automatically as soon as you request information. But yeah, would love to talk to you, anyone in your that are listening this podcast in terms of land investing, because that's a very specialized asset
Yeah.
class. Very, it's a
Yeah.
specialty investment, and there's a lot to learn before you can actually place capital. But once everything clicks, and you got a team behind you that can support your investment. I mean, we've got 450 guys that already crossed the path and started investing with us. So we're gonna keep doing it, keep
Yeah.
growing.
Well, fantastic, man. I really appreciate you coming on and sharing your journey and what you're working on. And look forward to following up with you later on and seeing how everything's going, maybe later in the year or end of the beginning of the following year, just to see how everything went, so we
Yeah,
can show your journey.
yeah. Thank you, Scott. I mean, the deal that I presented to you a year ago, we're selling it in March, so hopefully
Yeah, no,
we'll
so
get
it's
first round.
bravo. That's actually what I remember, because you popped up in my feed again. I was like, oh, wait a minute, let me see what he's doing. So
You're still around.
yeah, he's still around, he's still alive, still kicking. But thanks again for coming on, and
Thanks, Scott.
look forward to following up with you, and we'll be in touch. I'm Scott Kidd, the Yacht Captain Investor. Just a quick reminder that the best investment you can make is the one you make in yourself. So invest wisely in yourself and keep doing it. Talk to you guys later. Thank you.